crisis because we spent money we didn't have. Government did that, people did that. We're this gigantic hole. We got to get out of this hole. We get out of the hole by filling it back up again. So if we spent our way into the hole, we save our way out of the hole. Right? We don't spend more. That's digging the hole deeper. That's what we've done. And so what's happening? You've got Barack Obama comes onto office now, and he campaigns on change. Right? I'm going to change. Oh, well, he doesn't change anything. He's doing exactly what Bush did. He's got his playbook and he's following it to a T. He inherited a busted asset bubble, but this was a bigger bubble. The real estate bubble was bigger than the stock market bubble. And so the mistakes that we made were even bigger. The economy is even more screwed up now than when George Bush got there. So now we need an even bigger stimulus, right? Because it's a bigger problem. And that's what we're doing. Instead of having interest rates at 1%, now they're at 0. Right? Does anybody think that 0 is the right rate? I mean, especially in a country, markets set prices by supply and demand. We got no savings and everybody's borrowing. The free market price for interest should be 0. So if we did all this damage with 1%, imagine what we're going to do with 0. And of course, on the deficit front, I mean, there we just went off the charts. The deficit, the budget deficit for this fiscal year is $1.8 trillion. In 1 year. I mean, that's 3 or 4 times anything that Bush did. That's just 1 year. And so, where's the change? It's just the same mistakes, bigger. And the reason there's no change is because the same Wall Street cronies that were advising Bush are advising Obama. He's getting the same advice from the same people. So why should it be any different? Maybe the only difference is Barack Obama has more grandiose vision of what government can do domestically. So he wants, to insure another 20 or 30 million people with health insurance. I mean, the guy's clueless. We can't even afford to pay for the insurance of the people who are already getting government benefits. How can we add more? We are completely broke. And he talked about, moving the troops out of Afghanistan and moving the troops out of Iraq, but no, he's sending more. So he wants to increase our commitments abroad and increase our commitments domestically when we're already trillions and trillions in debt. It's amazing that the OMB, the Office of Management and Treasury for that matter. I mean, we've turned Treasury into some kind of hedge fund where the job of it is to try to keep the bubble economy going. I mean, the Treasury, the OMB, their job is simply to make sure that the government has the money to do what it wants to do. Right? When the king had a treasury, he would go to the treasurer and do I have enough money to fight this war? Do I have the money to maintain my court? And if they didn't have enough money, they said, no, you need to raise taxes. That's what the treasury, they kept track of the money. That's what they're supposed to do, the OMB. And so you have this Office of Management and Budget, and they're supposed to be working on the budget. And they come to the numbers and they say, okay, we're going to have a $10 trillion deficit. This is what they report. We're going to have a $10 trillion deficit for the next $10 trillion a year for the next 10 years. And everybody's okay with that. I mean, what they're supposed to do is when the OMB crunches the numbers and that's what they come up with, they're supposed to say, hey, wait a minute, guys, we need to do this over here. You got to cut some spending. The budget doesn't add up. This is unsustainable, right? We can't just, go with this. Like, this is our budget. Like, if your kid comes home from school and he says to his dad, I've come up with a new plan, a new study plan for my academic career. He says, I'm going to flunk every course I take for the next 10 years. And then you're going to say, okay, let's go with that plan. You say, wait a minute, no. They can't do this. They just can't say that's our budget, but that's what they've done. So we're doing what Bush did, only on a much bigger scale. So the question is, what crisis are we setting up? What is the payback when this stimulus, which is way, way bigger, and not only that, it's all when the dot-coms failed, we let them fail. We didn't bail any of them out. We didn't make that mistake. Dr. Coop is not still, getting money or, whatever all these cockamamie, internet, the Globe, or I forget the names of some of these companies that were out there, K-Tel or Petstock, all these different companies that went by the wayside. Now we're bailing all these companies out, all these financialist firms, AIG, or that should have failed. I mean, the government bailed them out. Freddie and Fannie bailed them out. Bear Stearns they got bailed out because they got bought by J.P. Morgan. And if the government hadn't set up this TARP, and if the Federal Reserve hadn't loaded up its balance sheet with assets that no one in the private sector would touch with a 10-foot pole, they got over $1.5 trillion worth of basically toxic mortgage-backed securities, securities backed by credit card debt, auto loans, student loans. All this stuff is basically worthless, but the Fed bought it. If they hadn't done that, all these firms that own that stuff would have gone out of business. And that would have been fine with me. Why? Now you've got all these politicians upset that people at Goldman Sachs are getting record bonuses. Well, if they hadn't bailed them out, they would have all got pink slips. So why did they just let them fail? It's not like the country can't survive without these firms. We don't need all these firms. We need more manufacturers. We need to make more stuff. We don't need more paper shufflers. We don't need more leveraged speculators out there. That's part of the economy that needs to contract. But the government isn't letting that happen. So we're getting worse than just stimulus. We are keeping companies in business that need to fail. Imagine if we had kept all those .coms in business. How much would that cost us? We've now transformed the financial investment banks. They're public servants. They don't have to make a profit anymore, but they can get rich gambling with our money. What about the auto industry? The government is running the auto industry now. You think, what chance is there now of Chrysler or General Motors ever making a profit? Now that we've effectively turned them into Amtrak or the post office. And if we would have allowed a real bankruptcy of those companies, then maybe the American auto industry would have a chance. Because if we let those companies go bankrupt, somebody would buy up those plants. And they wouldn't have all the liabilities. They wouldn't have the union contracts. They wouldn't have the pension benefits. All that would go away. You know what? Because it never should have been promised in the first place. But what would happen is somebody would go up and buy those plants and hire all those unemployed auto workers. They wouldn't be getting, what they're getting now, but you know what? They'd be making cars that people wanted to drive, that people could afford. They'd actually have viable employment. And we'd have more people working in the automobile industry. The politicians try to say, no, we need, look, we bailed out Chrysler in 1979, and so that was an example of a bailout that worked. No, that was an example of a bailout that failed. It didn't work. Chrysler is bankrupt again. Look how much it cost the government because we kept them in business. And if we would have let Chrysler fail in 1979, believe me, GM would not have failed today. Because that would have put the fear of God in the GM and the labor unions and the management. They would have realized that they could go out of business. And they would have been forced to restructure. Instead, the management was able to cave into whatever demands the unions made. And they made the industries uncompetitive. But the government now is subsidizing those union contracts, keeping them in force, and preventing these companies from being viable, from being profitable. Now they're going to lose money every year, just like the post office, just like all these other government-run programs. And so we're going to have to keep feeding them money. The government has now socialized the entire mortgage market. I mean, Fannie and Freddie are they're not just government-sponsored entities. They are the government. They're owned by the government. It's taxpayer money. But also FHA and Ginnie Mae. All these institutions, over 90% of all the mortgages in this country now are issued or guaranteed by the U.S. government. It's like a government program now. And so the government's going to hold all these mortgages. Now again, now you get credit as being extended for political reasons. They're trying to prop up real estate prices. And what are they doing? The private sector learned from the mortgage implosion, right? As soon as all these loans started to go bad, they started tightening up on their lending standards. They wanted higher down payments. They wanted higher, loan to values, all this stuff. Well, the government's doing the opposite. The government saw the subprime market going away, and they saw an opportunity to corner the market, right? Even though they're cornering a market of losses, right? And so now, look at the FHA. The FHA is now issuing 25% of all the mortgages in this country. What's the down payment for an FHA loan? 3.5%.